Welcome to our deep dive on a confusing but crucial topic. Whether claiming a low-income adult partner as a tax dependent affects Medicaid eligibility. Right away, the headline is that IRS tax rules and state Medicaid rules operate separately. In this video, we will unpack how Medicaid actually determines eligibility, why tax dependency status is often irrelevant, real-world scenarios, and what steps you should take during tax season. We'll also include diagrams, quizzes, and a clear disclaimer. Let's get started. In this agenda, we will first establish the core principle that IRS tax dependency rules and Medicaid eligibility criteria operate independently. Next, we will examine how Medicaid is actually determined, including MAGI rules and non-MAGI pathways. Then, we will walk through real-world scenarios to make the concepts concrete, compare IRS and Medicaid rules side by side, and outline practical steps you should take before filing. We will also bust common myths and test your understanding with short quizzes. To ground our discussion, remember that the IRS administers federal tax law and focuses on annual income and household relationships for the purpose of tax filing. Medicaid eligibility is administered by state agencies under federal guidelines and typically relies on modified adjusted gross income rules, household size, and monthly income. Because these systems are distinct, claiming a dependent on a federal tax return does not automatically terminate or deny Medicaid coverage. This diagram shows two systems running in parallel. On the left, the IRS focuses on annual income and dependency criteria and produces a tax return. On the right, the Medicaid system evaluates eligibility based largely on monthly income and household composition under state-specific rules. The dashed lines stress that there is no direct control of one system over the other. In practice, data can sometimes be matched or requested, but the decision rules are distinct. Therefore, claiming someone as a dependent on a tax return does not by itself govern their Medicaid eligibility outcome. Medicaid for most adults uses MAGI methodology, which is derived from tax concepts, but is applied on a monthly basis rather than strictly annual income. Household size is defined by Medicaid rules under the ACA framework, and may align with tax filing plans but is not automatically identical. There are also non-MAGI eligibility pathways, such as for aged, blind, or disabled individuals, or for pregnancy and postpartum coverage, which can use different income counting rules and may ignore MAGI altogether. Each state administers Medicaid under federal guidance, and they can vary in verification processes and category thresholds. This sequence diagram illustrates timing. The taxpayer files a return once per year and may claim the adult partner as a dependent. Meanwhile, the Medicaid agency runs a monthly evaluation cycle. It gathers household details, verifies income, applies MAGI rules, determines the eligibility category, and issues a decision. The key point is the asynchronous nature and the difference in clocks, annual for taxes and monthly for Medicaid. IRS dependency status only matters if it changes the Medicaid household composition under MAGI rules. Otherwise, dependency itself does not determine eligibility. Let's walk through common situations. First, if you are unmarried and claim your low-income partner as a dependent, Medicaid still generally looks at the partner's monthly income and the Medicaid-defined household, so coverage is often unaffected. Second, marriage changes things, because Medicaid counts spouses together and may adjust the household size and income. Third, the eligibility category matters, such as whether someone is an expansion adult or a parent/caretaker. Fourth, disability pathways, ABD, use non-MAGI rules and disregard tax dependency in many instances. Fifth, pregnancy and postpartum coverage feature special rules that prioritize current status and monthly income. Finally, always consult your state's guidance because implementation varies. Comparing the systems side by side, the IRS looks at annual income and uses dependency tests such as relationship, residency, support, and income. Medicaid primarily looks at monthly income and uses MAGI-based household rules, with some categories that do not follow MAGI at all. The IRS is a single national code, while Medicaid is a federal-state program with variations by state. The IRS outcome is financial refunds, liabilities, and credits, while the Medicaid outcome is coverage approval or denial. This table debunks pervasive myths. Claiming a dependent does not automatically cancel Medicaid. Medicaid does not merely read last year's return. Because eligibility is often based on current monthly income and household composition. States do not use identical rules, and non-MAGI pathways rely on different criteria than tax dependency. Before filing, identify your Medicaid category and the relevant threshold in your state. Next, determine your household under Medicaid rules, which can differ from tax filing plans. Calculate current monthly income for relevant household members. If there have been changes such as job loss, pregnancy, or disability, report these quickly to your state agency. Do not rely on assumptions. Reach out to your Medicaid office or a certified navigator. Keep detailed documentation, including pay stubs and official notices. Quiz time. The question is whether claiming your low-income adult partner as a tax dependent automatically makes them ineligible for Medicaid. The options are: A. Yes, it automatically makes them ineligible. B. No, Medicaid uses its own rules and monthly income. C. Only if the IRS audits your return. And D. Only if you also claim the Earned Income Tax Credit. You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is B. Medicaid uses its own rules and relies primarily on monthly income and Medicaid household definitions. Therefore, claiming someone as a tax dependent does not automatically render them ineligible. Our second question asks, which factor most commonly drives the eligibility decision under MAGI Medicaid? The options are: A. Annual taxable income from last year. B. Current monthly income and Medicaid household size. C. Credit score. And D. The size of your tax refund. You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is B. MAGI Medicaid is driven by current monthly income and Medicaid household size rather than last year's annual taxable income, credit scores, or refund amounts. These are the most important points to remember. The IRS and Medicaid are separate systems operating on different timelines. Claiming someone as a dependent does not automatically cause loss of Medicaid. Monthly income and Medicaid household rules are central. Eligibility categories and state-by-state variations matter. And when uncertain, confirm details with your state Medicaid agency or a certified navigator. Use this quick reference as a working checklist. Identify your category, determine Medicaid household size, calculate current monthly income, gather documentation, and contact your state or a navigator if needed. Watch for red flags such as assuming tax dependency cancels coverage, relying on last year's annual income instead of current monthly income, or overlooking non-MAGI pathways like ABD. To summarize, Medicaid eligibility is typically determined by monthly income and Medicaid household definitions. Tax dependency status alone does not control Medicaid eligibility. Always verify state-specific rules and your eligibility category. Document important changes, and communicate promptly with your Medicaid agency. Disclaimer: this content is for educational purposes only and does not constitute legal, tax, financial, or benefits advice. Rules can change and differ by state. For personalized guidance, contact your state Medicaid agency, a certified navigator, or a qualified professional. Thanks for watching. If this video helped, please like, share, and subscribe. We also want to hear from you in the comments about your experiences and questions regarding Medicaid and tax filing interplay.